Donald Trump's tenure as the 45th President of the United States saw an aggressive shift in trade policy, with one of the most significant moves being the imposition of tariffs on various imports. These tariffs, particularly on Chinese goods, dramatically reshaped the economic landscape, affecting not only the U.S. economy but also global markets. The ripple effects have been felt across North America and around the world, impacting stock markets, trade relationships, and overall economic growth. The U.S. stock market, volatility and uncertainty. In the U.S., Trump's tariffs created significant volatility in the stock market. When the administration first imposed tariffs on Chinese goods in 2018, fears of a trade war triggered a sharp decline in the stock market. Investors, worried about rising costs for companies and retaliatory measures from China, reacted by selling off shares, leading to significant fluctuations in indices like the Dow Jones and the S&P 500. The tariffs initially targeted China, one of the U.S.'s largest trading partners. With tariffs on $370 billion worth of Chinese imports, U.S. businesses, particularly manufacturers and retailers, faced increased costs for raw materials and goods. This, in turn, affected their profit margins and earnings, which contributed to the stock market's volatility. Companies in industries such as technology, automotive, and agriculture were particularly vulnerable, as they either sourced raw materials or sold finished products to China. However, the impact wasn't entirely negative. Some sectors, especially domestic producers in industries like steel and aluminum, saw a short-term boost due to the protectionist policies. The America First rhetoric around the tariffs encouraged a sense of nationalism, leading investors to pour money into sectors that were perceived to be shielded from global competition. Yet, these short-term gains were often outweighed by long-term concerns about global supply chains, international retaliation, and overall market stability. The Canadian impact, trade relationships in flux. Canada, the U.S.'s largest trading partner, was directly affected by Trump's tariff policies, particularly in the context of the renegotiation of NAFTA, which eventually led to the USMCA, United States-Mexico-Canada Agreement.